morning and welcome to the trade setup right here on BloombergQuint Live. I'm Neeraj Shah. Excuse me for my throat, a slight viral, so you might find a bit of an interrupted flow, so to say. But let's try and put up our best. The world markets are doing okay, and therefore that's the good sign from a bull's perspective. Remember, US markets shut shop on a very strong note in Friday's session. The futures, as we speak, are not showing too much of an untoward movement, so therefore the going seems to be okay, and by virtue of all of that, Asia is likely to start off on a much better note. Keep in mind, the Chinese markets have a week-long holiday, so you have to bear that in mind. So don't look at Asia just as is. Kospi though is showing about a downtick of 1.5%, but let's get the SGX Nifty up. I would have suspected that the start would be positive in light of what the US markets did in Friday's session. Our markets have some bit of weakness, of course, keep in mind to themselves, the trends, and maybe a combination of what lies in store for the week ahead as opposed to what happened on Friday, as well as the kind of moves and the ranges that the Indian markets broke are probably compelling us to start off on a flattish note. The question is, can we build on from there or will we buckle down under pressure? Now, why do I say that there is a bit of pressure on the Indian markets? First, the MOV function on the Bloomberg terminal should come up on your screen, and then we'll go on to a chart from Dr. C.K. Narayan's weekly column, pertinent to bring that up. First, this, not that it is alarm bells, and this could very well change, right, as it has for the last 3-4 sessions, but the market breadth was negative in Friday's trade. The index has largely been trading flattish to marginally in the red, but the breadth used to be positive on the NSE 500 for all of the preceding 3 days. In Friday's session, we had that bit of a sell-off wherein the breadth was also a bit negative, and a lot of usual movers, corrected in Friday's trade. You had textile companies, real estate companies, reopening trades like hotels, power and oil and gas, all of them came off. So these were the best performing pockets for a while, and there was some serious profit booking seen in these names. So do watch out. There could be interesting moves into some of these stocks in the session today as well. The other bit is the derivation of what Dr. C.K. Narayan's weekly column suggests. And I mean, I believe the whole thing should be read in totality, but I'm bringing you that one chart that I thought was pertinent, which is the Nifty futures since July chart. And look at what it is trying to say. Essentially, this one, excuse me, has broken a short-term support trend line. And I saw this, by the way, after reading this column, I saw this in a couple of other emailers sent to me by brokerages as well, or how all of them were giving credence to this particular trend line breaking. And therefore, does it mean that we will definitely correct? No, I don't think so. I don't think anybody can say that. But does it warrant caution? Yes. Does it mean that there could be some more downside and one should be vigilant? I believe the answer is yes. As per whatever little I've read, in all of those pieces. I'm not a technical expert, to be honest, but I think the derivation of the 2 or 3 pieces that I read after I read this in this particular piece as well seems to suggest that. But there's a bit of caution on the screen for most people, so be mindful of that. And the reasons could be aplenty. We all know that the FII attention is now visibly shifted away from India. Some other EMs as well, but India definitely. We haven't seen the meaty flows. In fact, we've seen quite hefty outflows on given days from the FI community. Even though DIs are holding fort and pumped in about 7,000-8,000 crores in the last 2 weeks, but the FI outflow is visible there across EMs and definitely India. And I do believe that oil and rupee sensitives would continue to remain in focus. FI is money moving away, oil moving higher, which is net negative for an economy like India. And that is probably playing up on the currency as well. And I think most currency conversations that I've read, the emailers that come in from individual houses to BloombergQuint as a mailer, suggest that they believe that the rupee is on its way to maybe 75, 76, unless, of course, oil does a big turnaround, but doesn't seem to be the case. And gas prices, of course, are revised higher, and there is some bit of gas import that India does in a meaningful way, LNG in particular. So could be interesting to see what happens to some of these oil and rupee sensitives. What to watch out for this week? Of course, the MPC meeting as well as TCS numbers, the Q2 results and commentary on the 8th, and therefore very, very important to see what the big boy from IT wants to tell us about what the outlook ahead for the second half could be, and whether they're able to maintain margins and what is their view on attrition, if at all. So it'll be very, very interesting to see. In fact, for Q2, most of the IT companies, I think one keyword that all of us business anchors would be asking the managements would be, what is their view on attrition? So I think it'll be very, very important. Experience on attrition and view on attrition going ahead. So that'll be a very important underlying headline from TCS. Let's wait and watch. Thus far, I think they've managed it really well. Let's see what they have to say about the future ahead. What about stocks to watch? Well, I've been given graphics for UPL and Z, but I'll talk about them at the end. Let me start off with Grasim. The Deputy Commissioner of Income Tax has imposed a capital gain tax on the company of 8,334 crores. That's huge. The tax related to a sale of shares in the group from Aditya Birla Capital during the tax assessment year 2018-19. Of course, the company said that they take appropriate action against the said order. We don't know how this one shapes up, but this is a very large demand. I would reckon Grasim would react to it. So watch out for this one. Now, there might be a view in the market from the informed investor that this will not get through, and therefore maybe it is a buying opportunity at the lower levels. But for all of you who do not know it for sure, if you understand legalities, tax related matters, and believe that this is something that will be settled or something that will not come to fructifying, it's a separate thing. But otherwise, be careful if you're trading into this counter. So this is one. Then the Q2 updates. I think there are 4 or 5 companies which came out. I've brought the 3 which mattered the most according to me. DMart. I think the revenue bounce back for Q2 is very strong. Standalone revenue up 46% YOY. Revenue up by 28% over Q2 FY20, the normalized year. This is the story of the strength of the franchisee of DMart, that over Q2 FY20, the revenues are up 28%. Quite telling what the brand like DMart is able to do. I mean, you write it off n number of times, it bounces back those n number of times. It's added 8 new stores in Q2 over Q1 as well. So really remarkable show. Under normal valuations and normal circumstances, I would have safely put my neck out and said that DMart will have a very strong reaction. It could still do have a strong reaction, but it's a very expensive stock as well. So you have to be mindful of that. The only point is, viewers, I must tell you that if you're a DMart investor, trader, shareholder, for the last 2 years now, some of the most brilliant minds or some of the most savvy minds in the markets have told me, oh, they switched out of DMart because the valuations are so expensive. They are battling against Reliance, JioMart, and everybody else. And therefore, they believe DMart will eventually lose out. They don't have a tech focus, everything. And I've been hearing those arguments since DMart was maybe 2,200. From there, DMart has marched to what it has marched. So this stock does what it does. It defies all logics of valuations, but people who love it absolutely smackingly love it. So there's no reason why, despite the valuations, it may not do well. But let's wait and watch. I repeat, great update. Valuations expensive. HDFC, again, very good update. Assigned loans amounting to about 7132 crores versus 3026 crores. Actually, this is a bit of a no-brainer, isn't it? If the real estate doing so well, how can the market leader not have a great quarter? So very strong update from HDFC. Let's see if there's a reaction to this one. Federal Bank, the Q2 update was also very strong. Advances up 9.66%, deposit growth 9.73%. CASA 36.16, 25 quarter high. It's improved 300 basis points if I'm not wrong. So again, Federal Bank, one more Q2 update that would probably please the street. If anything, while all 3 might react positively, I think the surprise element is probably in Federal Bank. Let's wait and watch if that has a positive reaction. Some other stocks in focus, Aurobindo Pharma, it's a big howler of sorts. The MD has put in his resignation due to personal reasons. I would I would believe this should be construed negatively for Aurobindo. Let's wait and watch how this reacts. Hero Corp, the overall sales up 16.84% at 5.30 lakh units versus 4.53. Extremely positive set of delivery from Hero Corp. I think two-wheelers, excuse me, two-wheelers by and large have done well, but Hero Corp in particular doing very well. So watch out for this stock reaction. And NTPC, I think Bloomberg has said that the company plans to IPO three of its units, could raise about $2 billion. These are, I believe, renewable units. Now, not only is this announcement positive for NTPC, but it also opens the mind to think about what could happen to companies like JSW Energy and Tata Power because of their renewable arms. So watch out for these. The only caveat to this is that keep in mind, viewers, if indeed the renewable arms start getting valuations which are meaningful, the thermal assets, because of their very anti ESG utility, will eventually die down in value. Sure, they could have dividend yield value, so to say, but yes, there is fanfare around the renewable energy valuations, and there should be, and maybe it will go a distance. But it's not that both arms are valued enough at the same attractiveness, and therefore, if incremental valuation on renewables adds to the overall valuation. I think some part of the run up in a JSW Energy, for example, is on account of the fact that the renewable portfolio is growing so well. Is it enough? I don't know. But yeah, I think power is in a sweet spot, and there's no reason why this should not please the street and should not please the NTPC shareholders. So do watch out for this one as well. Sugar stocks, I think there's a positive here. Sugar mills that will divert sugar to ethanol would be getting the entire quantity of sugar sacrificed on producing ethanol in their monthly release quota. Remember, monthly release quotas are very definite, and sugar companies only got X quantum of quota. But if they're diverting a certain quantity to ethanol manufacturing, then there is an additional limit in their monthly release quota allocated to them. This is from the Ministry of Consumer Affairs, and this should be positive. More diversity for ethanol. I would reckon that entire ecosystem therefore benefits. If anybody thought that because of EVs the ethanol movement in India is getting diluted, I think Nitin Gadkari's statements and this Union Food Ministry's statements leave you with no doubt that for the near term, ethanol is the here and now. Don't disregard it. Telecom, DOT has amended the license agreement for change in interest rates, penalty, and interest on penalty on delayed payment of license fee or any other dues. I would reckon this should be construed positively for Bharti Vodafone in particular, maybe even Jio. Do watch out for these. And in terms of brokerages, Nomura's note on Cummins, as well as others, but I'm bringing out Nomura because I have it. The others also have given the same verdict, so to say, except for Kotak, which is saying that they don't believe this is bad from any angle. But Nomura's note on Cummins suggests that the draft electricity rules reinforce their view of the structural changes to diesel-based power, which should be negative for Cummins India. Their rating is reduced, target price of 60.66. The stock was down in Friday session, remember, but Nomura, Jeffries, Macquarie, all of them have a target price which is around this or maybe even below this, except Kotak, which has got a target price above 1,000. They believe that this is too much of noise and will not impact Cummins as much. Lastly, before I wrap up, viewers, couple of stocks. One of them is Z Entertainment, wherein the companies moved the High Court against the two biggest shareholders, Invesco and OFI Global China. This shouldn't be seen construed too positively. I know that the Sony deal is great, but if the largest shareholders are bent upon a clean and fair play and not letting the deal go through, this strange, right? That you are wanting a deal to go through, even though it may have some question marks, because from a shareholder's perspective, it is good that it gets merged, the skeletons don't come out, etc. But the two larger shareholders have different plans, and from a minority shareholder perspective, it's not that great. So that is one. And lastly, viewers, just very quickly, I'm telling you, watch out for UPL as well. Uh, they in a release they've said that the agrochemical industry, which has a high reliance on China, because of this Chinese moves that have happened, a lot of the provinces have shut down certain products. yellow phosphorus and chemical parks, etc. And because of these disruptions, they are saying that the price of yellow phosphorus has significantly jumped, causing a severe shortage of raw materials for products which UPL manufactures, and large price increases and shipment cancellations are expected. So disruptions galore for, imagine, a company as large as UPL as well. So be mindful of all of this. Thanks so much for tuning into the Trade Setup. Excuse me for my sore throat, but just a bout of viral, which I can't do anything about. Thanks so much for tuning in. Stay safe, all of you.